Surprisingly, oil traders have barely reacted to a sharp slowdown in the U.S. inflation and the further escalation of the Israeli-Hamas conflict. What are market participants waiting for? Apparently, investors are awaiting the reaction of other Middle Eastern countries to another round of violence in the Gaza Strip. There have been no statements so far. No one dares to intensify the attacks, continuing to watch Israeli aggression. If nothing changes, quite a few investors may assume there is no risk of a wider regional conflict. Thus, markets will calm down and shift their focus to the economic outlook, namely the growing risks of a global recession accompanied by lower energy demand. This, in turn, will contribute to a decline in oil prices. In addition, production growth in the United States and Brazil is reportedly outperforming forecasts, allowing to avoid a supply shortfall in the fourth quarter. Yesterday, Brent crude oil futures briefly jumped above $84 per barrel, before falling back below the 83 mark. Thus, the quote closed at the level it kicked off the day. A downtrend is still intact. In a bear case scenario, the benchmark will resume weakness if the quote breaks through the level of 80 and fixes below 79.5. In the meantime, technical analysis suggests an upward move as the most likely scenario. If the quote consolidates above 84, the volume of long positions will increase further, thus pushing Brent crude up to the level of 88. Meanwhile, gold gained strong upside momentum driven by the U.S. inflation data. The metal even briefly topped the mark of $1,960 per troy ounce, coming close to $1,970 per troy ounce. With inflation slowing rapidly in the UK as well, the level of $1,980 per troy ounce appears to be just around the corner. In this case, gold may soon challenge $2,000 per troy ounce. If the price stays firm above 1,970, the yellow metal is likely to extend gains, hitting a new local high. Speaking of the ruble, its reaction to yesterday's plunge in the greenback was modest. By and large, the situation remained unchanged, and today, after the opening bell, the dollar dived below 90 rubles, reaching its lowest level since July 4. Most likely, this is due to exporters boosting the sales of foreign currency revenues. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.